So last video, then now there's something called higher time frame, lower time frame correlation, which what you do is you go up on the highest time frame, which me would I recommend starting on the daily time frame, to get an understanding as to what the market wants to do on a bigger scale. When you get the understanding what the markets want to do on a bigger scale, it is easier for you to enter a trade, and it's more like it gives you a better probability of winning when you understand what the market is trying to do on a day, on a higher time frame. So we're not trying to predict it. We're not trying to predict the market. We are trying to work with what the information we are gather, right? So looking at this, all right. This is the daily time frame. Remember, I'm telling about support and resistance. This is the daily time frame. Now, if I draw a zone somewhere, if I saw, but as I say, alright, that's a resistance. Also, my pass would be a support, isn't it? Like I've right, so cause price, right? So, yes, so, yes, so, yes, so. So, in a daily time frame, me I look on the price hit down at the support down so, and it reverse. So, me I think based on the previous occurrences, the price went up after going down, right? So me look on price go up on the daily time frame, and then on the 4 hour, so we go down the time frame. On the 4 hour, it show we even closer, so the price hit the low and is now moving up. Remember, we draw this from the daily. Now we're up on the 4 hour, see there, price went up there, came down, hit down here, when it's now going back up. So we have a bias to say the price is going up. It should be moving up for the rest of the day. Or when the day ends, it should be green. It should be a bullish candle, which we're going to talk about in a while. 1 hour, same thing. 30 minutes, same thing. As you can see, price touch down, so go up. Reach down, so go up. And I see thing going across. Reach down, so go up. 15 minutes. Alright. See there. 15 minutes reach here, went up. Coming down, went up, came down. So the higher time frame gives us the trend of the market, help us understand what direction the market is going into, and we prefer to get trades going in that direction because it gives us a higher probability of winning, right? So for our based on the 4 hour chart, it's looking like price is going to move up again. So I'll be looking for entries or looking for price to move up by the end of the day. You understand? So that's what higher time frame, lower time frame correlation do. Whatever information they get on the higher time frame, it should be the same thing on the lower time frame, trying to explain to you that price is trying to move up at this current moment. Now, we talked about the zone already. We talked about support and resistance. So support up, support down near resistance up top, and now you can see the price went down to a level where it's close to the amount, and now it start pushing back up. So that's how we identify. So the higher time frame, lower time frame correlation is basically identifying your zones as to where the price is having a support and a resistance, and making sure that it is giving you that information on the lower time frames as well. So the lower you go up on the time frame them, and the more information they get as to how the candle them did really move and where them actually been before. So as we can see, in between I will see some movements up and down, but yeah. So for the 15-minute now, I want to weigh them where you see how far if you zoom in, because a whole lot of things go up on the market. But the 15-minute now, if we were only looking at this part of the chart, we would not know what exactly will happen in the market, because just looking right here, it could mean that price is now at the very top and is ready to move down, and we could be looking for sells. But if we zoom out, we can say we just reached 12 a low based on a higher time frame, and now the market is moving up. But in order for it to move up, you have to move down a little bit, then move up, just like we see the previous moment ago. But I say really work. The higher time frame we use to find the trend, the direction for trade into, and find the zones or the support and resistances, and then we go on the lower time frame then to find an entry for the market. You see me? Yeah. You can see what I want. So me as a man who know say the market want go up, but wait for sure, but I wait until me see the price reach to this level or this level before me take a next trade. You understand?